Welcome to StraddleIncome. We're here to help you make money. Today we'll be talking about SPAC. And you might ask, what is SPAC and why should you be interested in this topic? Imagine you can buy a company while it was privately traded, not in the public market. You can buy those shares at $10 per share. And then once the company goes to public, and you can take a profit and enjoy the nice ride. Usually when the company goes to public, they will have multiple returns. And this is what happened to a lot of the SPAC companies this year: Draftking, Nikola, and QuantumScape. So the QuantumScape is now traded at $132 a share, but it's a SPAC, which is before it went to public, through this ticker symbol KCAC, which stands for Kingston Capital Acquisition Company. You can pretty much buy the shares at $10 per share. So it sounds interesting, and this sounds like a good deal. Please watch on and to understand the risk involved in trading SPAC, how it's being traded. And again, the information here is for educational purpose. Please make sure you do your own due diligence before you trade or invest. And lastly, if you find the information helpful, please subscribe and click the like button, and it will be really helpful for me to continuously provide you quality content going forward. With that being said, let's jump right into it. We'll be talking about a SPAC. What is a SPAC specifically? Pros and cons for an investor. The overall performance of the SPACs. How do you invest in a SPAC company? And lastly, we'll leave you some notable names, companies you can look into if you're interested in this kind of investing. What is a SPAC? SPAC stands for Special Purpose Acquisition Company. Basically, how it works is that you have a bunch of sponsors. These are people who are well known in the industry, and they could be investors, they could be top managements in the industry, and they're respected. They form a team and build a shell company, which is the SPAC company. Then they take the SPAC company to public, after filing all the SEC requirements, making sure they fulfill the oversight requirements with all the paperwork. Those companies, the SPAC companies, are now in the public space and are being traded at $10 per share. From that point on, they potentially have up to 2 years to find a company to acquire, do a merger and acquisition. And they go about into different companies in different industry sectors, talking to different companies privately owned, and find the suitable companies. Then they take that suitable companies to their investment board, and also getting approval from the board of the suitable companies. If everyone agrees with the deal, they put the suitable fund company into the SPAC company and then take it to the public. From that point on, they can really grow the companies. So that's basically how the SPAC is working. The key takeaway here is that SPAC is just another route of taking companies to public. There are different routes, one of which a lot of people are aware of and familiar with is the IPO, initial public offering. And another way is to do a direct listing, like how Google did, Dropbox did. They just put a company into publicly traded space and let the market decide the price. And SPAC is a third way of taking companies to public. Another key takeaway is that usually the SPAC companies, after it's been filing an initial document to the SEC, they have about 2 years to complete the acquisition. And if that doesn't happen, if the deal fails, you potentially can get the money back. Now, let's talk about the pros and cons for an investor. Pros, we talked about earlier. In the case of Draftking, Nikola, and the QuantumScape, you pretty much has a huge profit potentials if it's a good SPAC merger and acquisition. This is one of the key reasons why people are interested in SPAC, because the profit can be huge, and pretty much you're just getting early shares at a very discounted price, at a very affordable price. And if the deal goes south, you will get the money back. That's how SPAC usually operates, but make sure you read the SEC document of the SPAC companies. They almost always have a trust company. The trust company will invest the money in the trustee account, and they usually have 2 years to complete the deal. Otherwise, the money will be returned to the investors. In terms of accounts, definitely one of the things is the opportunity cost. Because the SPAC company has about 2 years to complete the acquisition, your money is pretty much just locked there for 2 years. Another reason in terms of the account is that acquisition target might not be a good company. Here's a little bit unique about SPAC. Sponsors usually have the incentives to make sure a deal is fulfilled. They usually have about 20 to 25% of the stake equities for the entire acquisition and deal. So they have strong incentive to make sure the deal goes complete. And because of that incentive, sometimes if they cannot find a good target company to acquire, they will cut corners and find some not so quality companies and take those companies to public. What does that mean? It means that potentially you will be able to trade those companies. Those are not so good companies, and the market will undervalue them, and you will potentially lose money. And that actually is one good segue to talk about the performance of the SPAC, which we'll go through next. And the last but not least is the regulation and oversight, because SPAC is not the same process as the IPO, initial public offering. In the initial public offering, a regular company will hire investment banker, and they will do all the paperwork, bunch of lawyers. So the entire process is very well defined, and there's a lot of people in the stake to they want to make sure this deal is legit and it's reputable. However, in the case of SPAC, because of the nature of the SPAC, there's less regulations, and which means there's higher risk for investors. Let's look at the SPAC's performance for the last 5 years. Overall, from 2015 to 2020, SPAC IPOs had underperformed after merger. However, in the last 2 years, the SPAC performance is much better than those earlier on, from 2016 to 2018. And it makes sense that the larger SPAC mergers have usually outperformed the smaller transactions. This could be related to what I shared earlier about cutting corners. If those sponsors cannot find a good larger companies to take it to public, they will find the small ones usually are not so good and take those companies to public. And the healthcare and tech-focused SPACs have usually outperformed versus energy sectors. In summary, from 2015, out of the 313 SPACs IPO'd, the average loss is minus 9.6%, and the median return is minus 29.1%. This is much, much worse than an IPO, traditional IPO. Traditional IPO is about 47.1%. However, with that being said, there are outliers and there's exceptions, such as Draftking, such as QuantumScape. Those companies are usually much giving an investor a much higher return than the regular SPACs. Again, this goes back to the topic of trying to make sure you do your own due diligence before you invest in a SPAC company. If you're still interested, how do you invest in SPAC companies? It's very simple. You just buy the common shares of the SPAC company using its ticker. In the case of Draftking, which right now is the ticker symbol DKNG, their SPAC company is this company called DEACU. You can pretty much buy the shares of DEACU, and once it completes the merger and acquisition, shares will be translated to the DKNG under the guideline defined in the SPAC documents. Again, I have to stress, please read the SPAC documents as SEC documents in terms, how to get the money back if the deal fails. And then secondly, how the SPAC shares are being converted to the publicly traded company's shares. There are different kind of way of doing that. There's SPACs warrants. There are different ratios. Basically, you have to read your document to understand how each SPAC company is going to perform the operation once it goes to public. If you're still interested in SPAC, I've assembled a list of names in different sectors. So from the electrical vehicle sectors to renewable energies, to fintech and e-commerce, and the media and the gaming sectors. Here's the list of the names, and I hope this is helpful to you if you're interested in SPAC. Again, please make sure you do your own due diligence. And lastly, Merry Christmas and Happy New Year.